Hello, this is Mary Rubenis. I am the Attainable Outreach Manager at MEFA, which is the Massachusetts Educational Financing Authority. And welcome to the Attainable Savings Plan webinar for the ARC. I am the, like I just mentioned, I'm the Attainable Outreach Manager at MEFA, and Attainable, MEFA is the state sponsor for Attainable, and Fidelity is the program manager. So if you're going to open one of these accounts, you open it through Fidelity, and they manage the accounts for us.
Thanks, Mary. Thanks for introducing yourself. This is Carrie Mahoney, and I'm from the ARC of Massachusetts, and I want to welcome you to today's webinar. Before we get going, I just wanted to make sure everybody can see the presentation okay, and you can hear us all right. So if you could just chat in the chat box to myself or everyone in the group, just say hi. We use the chat box for questions because we record our sessions, and we want to make sure we have good voice quality. So you are all muted upon entry, and so that's so we don't get any background noise. So it looks like we've got a good number of people who can hear us all. And then I'd love to hear a little bit more about who's in the audience today. So if you are a family member, can you say hi? Okay, so it looks like we got about 7 or 8 family members. And how about if you are a professional, if you could say hello? All right, looks like we've got a few professionals with us as well today, which is terrific. So without further ado, Mary, why don't you take it away?
Okay, sounds great. Thank you, Carrie. So usually when I first start, like I mentioned, MIFA is the state sponsor for Attainable and Fidelity is the program manager. I just like to share a little bit about what we do at MIFA, and so in the partnership with Fidelity. So MIFA is a not-for-profit state authority, and essentially our mission is to help families access and afford a college education. We do that through just free guidance, education programs around the whole college process, from planning to saving, and we offer some tax advantage savings plans. Attainable is one of those. We also do loans, and in general, we just offer just expert guidance around navigating the whole college process. So MIFA had selected Fidelity back in 1999 to manage the U Fund, which is the Massachusetts 529 program. So when Attainable was launched in 2017 in May, it was natural for us to partner with them to manage these accounts for us, again, for their expertise in money management in our previous relationship with the U Fund and the 529. Oops, the slide's not, there we go. The slides are a little sticky, I think. So what is an ABLE account? So the acronym actually stands for Achieving a Better Life Experience. And the ABLE Act was enacted federally in 2014, and it established a 529 code of the IRS tax code. Oops. I'm sorry, the slides are a little sticky. Harry, it's not letting me go back.
Okay, so what I'm going to do is I'm going to take control back.
Okay.
Alrighty, and we'll, and you'll just say next.
Okay.
When you want me to. Okay, so I'm going to.
There's some slide-ins, so yeah, I'll just say next when I know there's a slide-in.
Okay. Okay. Can you? Alrighty. All right. Hold on a second. And you're trying to go back, or you're trying to go forward?
I tried to go back because it there
you go.
There we go. Okay. All right. Let's try this. Let's see if it works.
Okay.
So like I just mentioned, ABLE account, the ABLE Act stands for Achieving a Better Life Experience. It was enacted federally in 2014 and established this 529A code in the IRS tax code. So an ABLE account is a 529A. And this ABLE Act essentially set up these accounts that allow someone with a disability to save for disability-related expenses without it affecting their benefits if they are getting them. And so the legislation really recognized that there's an extra and significant cost of living with a disability. And so these accounts were designed to allow someone to supplement any benefits they might be getting through private insurance, Medicaid or employment, SSI, and again, to use the money in an ABLE account for what's called qualified disability expenses. And so you can see on the right, there's a chart, and this is the categories of some of the expenses that you can use an ABLE account for. Healthcare, you can use it for housing, you can use it to pay rent or your mortgage. Education, you can use it to pay for tuition. Transportation, if you needed to buy a car, handicap van, use it for that. Assistive technology, if you needed an iPad to communicate, you could use it for that. Employment training, personal support services, if you needed a PCA, and general basic living needs related to your disability. Okay, my fingers are crossed here that it's not, there we go.
I just did it for you.
Okay, thank you. I always like to share this fact. The journey for this whole legislation to come about was actually started by a group of Northern Virginia parents of the Down Syndrome Association of Northern Virginia, and along with some national disability organizations such as the ARC, they lobbied to get this passed into federal law, and it took them almost a decade to do so. We can do next. And so 85% of Congress supported the ABLE Act. And I always like to share that the ABLE Act is one of the most significant pieces of disability legislation to pass since the Americans with Disabilities Act, which was 25 years ago. So this is hugely significant, hugely impactful for this legislation to come about. Next. So some of the benefits of an attainable account or an ABLE account, again, these were designed to foster and support overall health, quality of life, independence. They are tax advantaged, so they do provide, there's no federal or in Massachusetts taxes on the earnings or your withdrawals. They largely don't affect your ability for SSI. I'll talk about, there's an amount that it does get affected. And it does not affect your ability for eligibility for Medicaid or other public benefits. In terms of the SSI, you can save up to $100,000 without it affecting the SSI. When the account reaches $100,000, they say that the SSI is suspended but not terminated, and then once you drop back under, they reinstate their benefits. And so prior to this legislation coming into place, there is a $2,000 asset cap, which still exists unless you have an ABLE account or a trust. And so an ABLE account is essentially allowing you to save and have this money be protected over that $2,000 asset cap. And so it is really just an easy and accessible way for the average person, again, to save for these qualified disability expenses and without the cost of setting up a trust. And we'll go into the options in terms of portfolios, but there's a range of investment options that you can pick from when you're choosing an ABLE account. Next. So account eligibility. In order to be eligible for one of these, The disability has to have occurred prior to the age of 26, and you have to also have one of the following. You have to be receiving SSI or SSDI and meet that age requirement of the disability, 26. Or if you meet the age requirement and also meet Social Security's definition of a functional limitation, then you would likely qualify. We tell people you also should get a letter of certification from a licensed physician just stating that you do indeed have this disability, and you have that documentation on hand. You don't need it to open the account. We just tell people you should have it. So when you go to open one of these, the person with the disability is actually the beneficiary on an Enable account, and so they are the account owner. So they actually manage the account themselves. If for some reason they can't manage the account themselves, if they're a minor or not capable of managing it themselves, then Fidelity allows you to set up what's called a person with signature authority, or a PSA. And so that individual would then establish and control the ABLE account for the designated beneficiary, and just manage the account for them. Next. So some of the features of Attainable, and this, in terms of overall functionality, I'll just share. ABLE accounts, the functionality is all the same nationwide. So in terms of the cap that you can put in, the total balance that you can put in, that's the same nationwide. The differences are going to be, account fees and some other functioning of the accounts in terms of, is there a minimum to open the account, that type of thing. But in terms of the general basic functionality, they function the same. So just some account features for Attainable. And for all ABLE accounts, the total annual contribution is $15,000 that you currently put in per calendar year. So it's capped at $15,000 you can put into an ABLE account. The max that you can save in one of these accounts in total is $400,000. Just to reiterate, $100,000 is that mark at which, if you are receiving SSI, if you can save up to that amount with no impact on your SSI. But once you go over that amount, they would suspend your benefits but not terminate them until you drop back under $100,000. If you're on Medicaid, it's not affected by any balances in an ABLE savings plan. And for Attainable, there is a zero minimum to open the account and zero account fees. So you can open an Attainable account with as little as $5, and there's no account fees, which is great. Next. I think there's a slide in after this, so you might want to hit it again. Yep. So in terms of making a withdrawal from Attainable, or they call it a distribution, again, it has to be for what's called a qualified disability expense. Again, that chart that we spoke of earlier, things like education, transportation, housing, healthcare, basic living needs. It has to be for the benefit of the account owner in maintaining his or her health, quality of life, independence. You don't need to have an explanation when you withdraw the money from the Attainable account. However, the IRS may ask you to verify that you're using it for a qualified expense. So we tell people that you should keep track of how you're spending the money, keep receipts, should you need to produce that, just like you would for normal tax purposes. We can go to the next one. And so a distribution or withdrawal for a non-qualified expense would be considered non-qualified withdrawal. And so you would pay taxes as well as a potential 10% federal penalty tax on those earnings associated with the withdrawal. So you don't want to do that. You really need to stay within, what it is intended for, which it, is intended for these qualified expenses. And I think there's one more. So next. And again, they say these non-qualified withdrawals could impact your disability benefits. So again, you want to stay within, what it is intended for. We can go to the next slide. So in terms of timing of the withdrawals, Social Security doesn't, basically tells us you can spend the money however you'd like. You don't need to, you can take, if you were buying a handicapped van, you could take the money out in June, even if you were buying it in September. The only exception to that is the housing. You have to withdraw the housing money in the same calendar month that you're going to pay the expense. So if you're going to pay your rent in September, you have to take it out in September, on September 1st. You can't take it out at the end of August. You have to take, otherwise they would consider that a potential asset for that month. So again, if you're going to pay housing, you have to take it out in the same calendar month that you're going to pay that expense. And again, they say if the conditions aren't met, the withdrawal could count as a resource and impact your SSI benefits. After the money has been withdrawn, but before you spend it, Fidelity allows you to essentially move the money from your ABLE account into a separate account, such as your personal checking account, to then pay your bills. Or you can move it into, Fidelity has a cash management account where you can pay your bills from that. And if you link it, it's just a matter of linking it to your ABLE account. With that Fidelity cash management account, it allows you to write checks. So if you're looking for the capability to write checks, you would link it to this Fidelity cash management account and be able to pay your bill that way. We can go to the next slide. In terms of transferring these accounts, you can only have one ABLE account per eligible individual, but you can move the assets from one ABLE plan to another with no tax consequences. So meaning if you had opened an ABLE plan with an out-of-state program prior to Massachusetts launching their plan, you could, and if you wanted to transfer now, you could transfer the money from the other plan into the Mass plan with no tax consequences. You can also change the beneficiaries on these accounts. So again, you can transfer all or part of the money from one Attainable account to another person's ABLE account with no tax consequences, provided that they're related family member. And it's got to be brother, sister, stepbrother, stepsister, that type of thing. And then just to mention, Attainable is the Massachusetts ABLE Savings Plan, but it's available nationwide, so you don't have to be a Massachusetts resident to open an Attainable account. It's available nationwide. I just wanted to mention that. Okay, next. And so just some quick highlights in terms of opening one of these. The Fidelity page has additional product information around the distributions and just the overall account experience. They have dedicated Attainable reps that you can call on the phone to answer any questions that you might have. And again, there's a range of portfolios which we'll talk about. There are 8 of them that you can pick for your ABLE account. We just spoke about this Fidelity cash management account. You would link it to your ABLE account to pay your bills. It comes with a debit card that you can use. Fidelity also offers bill pay, which is essentially electronic bill paying that you could take advantage of as well. Fee-free ATM, and again, that check writing capability, which comes with that Fidelity cash management account. We can go to the next slide. These are the portfolios and what they look like. Again, there are 8 of them, and they range from a low-risk money market, and they just get more aggressive in growth. There are a range of stocks and bonds and short-term securities. Again, they can help you to determine what's appropriate for you, whether you're looking to invest short-term or long-term, however you're looking to mix up the allocation. I'll just tell you, you can change the allocation on these up to twice a year. So you can change it up to twice a year once you make your selection. We can go to the next slide. Some tax updates I wanted to share for 2018, which were pretty huge. The first one is the ABLE Financial Planning Act. And so what this allows you to do is, provided the beneficiary is the same individual in both accounts, or a family member of one account of the ABLE account or the 529, you can transfer funds. You can roll over from a 529 college savings plan into an ABLE account with no taxes. And you can, up to the $15,000 annual limit for an ABLE account in the calendar year. So you can roll over up to $15,000 from a 529 into an ABLE account now. The rollover can come from any state's 529. It doesn't have to be from Massachusetts 529. The other thing that came about, which is huge for someone with a disability who's working, is this Able to Work Act. And essentially what this legislation specifies is that an ABLE account beneficiary or owner who's working can now contribute over the annual limit of $15,000 into their ABLE account The additional amount that they can contribute is it's based on their gross income, or it's the lesser of either their gross income or the amount equal to the federal poverty line set for one person, which is currently $12,140. So whatever is less from their income or that federal poverty line. So potentially up to $27,000 tax advantage. So very significant that you're able to do this if you're working. The only caveat to this is if you do take advantage of this Able to Work Act, the beneficiary or the able account owner can't participate in his or her employer's work retirement plan. So you couldn't do both. We need to do one or the other. We can go to the next slide. Another tax update for 2018 was this Savers tax credit, which existed for retirement savings, but now exists as well for able account beneficiaries. And so these are some of the criteria that you need to have to be eligible for the credit. You have to be 18 or older, not a full-time student, and not claimed as a dependent on another person's return. And essentially what this is, without reading all these figures, but it's essentially a tax credit that you can take based on your contribution to your ABLE account. And again, it's based on your adjusted gross income, and it's a percentage of your contribution. So they give the example, if you're making $25,000 in adjusted gross income and you contributed $2,000 to your ABLE account, based on where you fall in the tax chart, you're eligible for a 50% credit. So 50% of that $2,000 contribution is $1,000. So you would be eligible for a $1,000 credit on your tax return by claiming this Savers credit. And then the figure drops, again, based on your income. It goes to 20% and then 10%. And then if you're earning above $47,250, the credit is not available to you if you're earning above that amount. So again, it's just a tax credit based on your contribution and based on your adjusted gross income and a percentage of what you've contributed. We can go to the next slide. I always like to share, this is a screenshot of Social Security. They have a great portion of their site that's actually dedicated to ABLE, that has a lot of information about ABLE and how it relates to Social Security. So I really wanted to share that. This is the link, and this is what it looks like. It's called the Program Operations Manual System, or POMS. And there's a lot of information here, again, about ABLE and how it relates to Social Security. So I definitely recommend that you go there and take a look and familiarize yourself with it. Sometimes people tell me they go into Social Security offices and they're not familiar with ABLE accounts. So it's great to know that this exists. Maybe print out the pages or at least familiarize yourself with what's there. It's super helpful. We can go to the next one. Some other resources I like to share, the ABLE National Resource Center, or ablenrc.org, is a great resource for everything related to ABLE education. They have webinars frequently that you can sign up for that are fantastic. They actually just did one, which I highlighted here, on trusts and ABLE, that I highly recommend that you take a look at, and you'll see the link for it on the screen right here. They also compare state plans, so you can go to the site and they compare all the state programs. And they're constantly updating the site with new tax information and just new updates as they happen with ABLE. So it's a great resource. I definitely recommend checking that out. They're really fantastic. The other one that might be helpful for people is this IRS publication 907, and this is the link. It's just a tax document that's published yearly by the IRS that's specific to someone with a disability filing their tax return. And again, ABLE information is included here. So just it's worth taking a look at. I think it might be helpful. The MIFA site to learn more about what we do at MIFA is mifa.org, and the Attainable Savings Plan to sign up for an account on the Fidelity site. The site is fidelity.com/able or /attainable. And again, you would go there to sign up for an account, or you could do it over the phone through the 800 number. that's available on the site. You can also go in person. Fidelity has investment centers that are located throughout the state. There are 9 of them that are geographically located. So you can go there as well to open one of these accounts. You can go to the next slide. Thanks. This is my contact information, my email, and these are all the channels that you can follow MIFA. We post quite a bit of disability content along with our regular content. We're sharing more and more. So I encourage you to follow us on our social channels if you're on social. This is a screenshot of the Attainable landing page on the MIFA site where you can, it's circled down below, you can sign up for emails for the Attainable Savings Plan, and as things change related to ABLE and tax updates, we would notify you, or just information that we feel is very important to share. And again, you can just sign up on the MIFA site with your email. I'm just super passionate. I just want to share that, you know, I am a parent of a child with a disability, so I'm very passionate about trying to help people find resources. And, you know, if they have questions, to try to answer the questions. If I can't, you know, tell you the answer, I'll try to get it through a resource that I may have in the community. So I always like to mention that. So I hope that was helpful. Again, please feel free to reach out. If anyone has questions, please let me know.
Okay, thanks, Mary. We do have a few questions in our chat box. So from Marissa, do you know if a representative payee can set up an account for an individual? What if they live in a DDS-funded group home in which the agency is rep payee, but there's also a legal guardian outside of the agency? Could the rep payee open an account on behalf of the individual, or would the legal guardian need to do it?
So, you know, one thing, so in order to be a PSA, which we talked about earlier, you know, which is that person with signature authority to manage the account, that person would need to be either a parent, a guardian, or power of attorney. So if that person meets one of those designations, then they would be able to open the account and be the PSA for that individual.
Okay, thank you. And then from Jody, what happens to the account if the beneficiary dies? Do you have to pay back any money to the state for funds you used over the years?
So if the beneficiary passes away before, the money actually goes to the person's estate. So, but before that happens, you can pay burial expenses, and you can also pay any outstanding disability expenses that they might have. If the person had received Medicaid, there is a Medicaid clawback, meaning only from the time the person had opened their ABLE account to their passing, if they had received any Medicaid benefits during that time, they use the words may or potential. The state may or potentially claw back some of the money that they paid out to that individual, minus any premiums that they might have paid. But just to mention, the Medicaid clawback in Massachusetts exists whether or not you have an ABLE account or not. The only way to really avoid that is if you have a trust, which actually leads me to a good point in terms of trusts and ABLE. Sometimes people ask me, you know, should I open an ABLE account versus a trust, that type of thing. And I tell people they can work really nicely together if you have the option to do both. In fact, you can pay housing from an ABLE account, which I mentioned. You cannot do that from a trust. My understanding is that it would impact your SSI benefits. So the nice thing if you had both is that you could move the money from your trust into your ABLE account and then pay the housing. And just some other differences in terms of, you know, setup and cost. Again, ABLE, you know, is more accessible for the average person. A trust is going to have a higher startup cost to it. And in terms of access to the funds, ABLE is going to have more accessibility and freedom in spending the money versus the trust. So I just wanted to mention that in terms of that spinoff off the Medicaid clawback. But yes, it does exist whether or not you have it or not, and the only way to avoid that is with the trust. So I hope that answers the question.
Okay, thank you. And then from Michael, can both mom and dad be the person with signature authority, or is it just one for the account?
So there can only be one on the account, just one person to be the PSA.
All right. Okay. How about anybody else? Anybody else have any? Yes. Okay. Is Vitality has a question. Is legally blind persons eligible for ABLE programs?
So as long as, if that's considered a functional limitation under Social Security and they meet, again, the age requirement of the 26-year-old, so the disability would have to have occurred prior to the age of 26 and have that Social Security functional limitation, then they would likely qualify, yes. Or if they meet the age requirement prior to age 26 and are getting those benefits of SSI or SSDI, then they would be automatically eligible.
Okay, thanks, Mary. And then Scott has a question. Are there any exceptions to the $15K a year contribution rule?
No, so that's currently the cap on ABLE accounts. And again, that's nationwide. So every ABLE account functions in that same way. 15,000 is the cap currently. But I will tell you, it will increase with, cost of living increases. Since ABLE was passed back in 2014, it originally started at 14,000 per year, and now it's up to 15. So that will, change as well. The other thing I can think of that's in the process of likely changing as well is the age requirement. So it's before the Senate now that they're looking to raise the age to 46, I believe, for eligibility. So that will likely change as well. So I think, again, these are just going to continue to evolve and get better and just change a little bit.
All right. Mary Jean has a question. So if you have a balance in your 529 account above 15K, you have to transfer in increments only, correct?
That's right. You can't transfer over in a calendar year over 15,000. So the max you could roll over would be up to that 15K from the 529.
All right. How about anybody else? Anybody else have any questions? Okay. Right. Michael has another question. The way I heard this presentation, if a sibling had leftover money in a 529 account, it could go into the ABLE account.
That's right. Yep. As long as again, it's going to the person is obviously eligible. They have an ABLE account. Yes, you could roll over the money from the 529.
All right. How about anybody else? Anybody else have any questions? I'll just wait a minute or so. Just to let you know that, everybody will be getting a copy of the slides as well as a link to the recording. That will takes a couple of days. So we just have to download everything and get it up on our YouTube channel. So that will be, if you register, you'll get that link. EE has a question. Can you continue throughout the year as long as the balance doesn't go over 15K to contribute throughout that year?
Yes, you can contribute throughout the year. In fact, you can direct deposit into an ABLE account. You just can't contribute in a calendar year. You just can't contribute over $15,000 in a calendar year. But yes, absolutely, you can contribute throughout the year. And like I mentioned, you can direct deposit as well.
All right. Thank you. Anybody else? All right. Well, I think we're good. I want to thank our presenter, Mary from MIFA, for a really great overview of ABLE or Attainable. And we do have another question. So if you paid, so EE was also continuing. So if you pay down any of the balance for housing, etc., the total of 15K remains.
I'm not sure what they mean by that, pay down the balance, but you know, essentially whatever contributions you're making in a calendar year to your ABLE account, you can't go over $15,000. So whatever money you're looking to save in that calendar year in your ABLE account, you can't go over $15,000. Whatever contributions you're making, the account can grow over 15,000, right? It can grow up to 400,000, but you can't contribute in a calendar year more than $15,000.
Okay, thank you. So yeah, so you can't, if you spend down $8,000 of that, you can't put in an additional 8, is what I hear you saying.
Yeah, I mean, right.
Because it would be over the 15K total. So yeah.
Essentially.
So hopefully we.
Yeah.
Okay, great. All right. Okay, I think we're good. Unless anybody else has a quick question they want to get in there, but you know, I want to thank all of you for attending today, and thank Mary for a great overview. Oh, Mary Jean just typed in, seems really low if you're paying housing for a year, and is there any plan to change the amount?
To change the 15,000 amount?
Yes, that's what I believe she's saying.
Well, like I mentioned, I mean, currently it's at 15. I imagine, you know, again, that's going to increase, you know, at some point. But currently it's $15,000. So every ABLE account nationwide, the cap is $15,000 that you can contribute in that calendar year. But again, you can save up to $400,000 total in an ABLE account. Or if you're getting SSI, just to recap, you can save up to $100,000 without an impact on, you know, your benefits, your SSI benefits.
Okay, Doreen says, what is before the Senate? Am I understanding the minimum age would be 46 if the bill passes?
That's right. So it's before the Senate now, and looking to raise the age of eligibility from 26. Yeah, I believe it would be 46, 43 or 46, but to raise that age of eligibility, you know, higher, so that someone who, you know, incurred a disability later in life would be eligible, because right now the cutoff is 26. The disability has to have occurred prior to 26. So they're looking to raise that. That's right.
Oh, okay, interesting. That would then maybe allow people with traumatic brain injury to be able to access this, which would be wonderful, because there's not many benefits for those folks, you know, because their disability occurs after that developmental period. So
right.
Good to know.
It's huge. Yeah, for anyone that, you know, a disability that occurred later. I mean, it's really unfortunate right now that, you know, but like I said, that is likely going to go up. It's before the Senate, and that's been in the works. So looking to raise that age eligibility.
All right, great. Okay, so I think we're good. I want to thank everyone again for attending today, and Mary. And after this webinar, you're going to be rerouted to a brief survey on how your webinar experiences was, and also any suggestions on webinars you'd like the ARC of Massachusetts to be able to provide. So I thank everybody for attending, and have a great day.
Thank you so much. And thanks for doing the slides.
Oh, no problem.